Welcome back to the channel, Crypto Trend Trader, with a afternoon market update. It is Friday at 4:41 p.m. Eastern Standard Time, and we're going to take a look at quite a few assets today, and we're going to do it in a short fashion. We're going to take a look at the Dow Jones Industrial Average, NASDAQ, S&P 500, Tesla, DXY Dollar Index, gold, silver, Bitcoin, Ethereum, and Polkadot. If you have any requests in the future, feel free to leave those in the comments. I will get to them, do a little long-term technical analysis for you. Also, if you're new to the channel, highly recommend that you like and subscribe. Turn on notifications, as I do put out a video every day, and I can take a look at whatever you like, long, short-term, in-depth. But the main purpose of this channel is not only to analyze these assets, but also to help you to learn how to analyze them yourself and essentially become self-sufficient. So let's start off with Dow Jones. We're on the daily chart here. I am using TradingView. All the indicators I use in the videos are available for free as well on TradingView. If you go down to the description of the video, you can find the names of those and just look them up. And again, I highly recommend that you check them out. Use them, modify them however you like, but they are all available for free. So here we have our Dow Jones Industrial Index. And just like most traditional stocks, indexes, etc. right now, a lot of the more popular ones, especially the indexes, are essentially at all-time high areas, in which case, you basically have a blue sky breakout situation going on here. Now we are starting to develop a little bit of a, horizontal resistance here at the top. We'll draw a couple of tools on here and just kind of lay it out. But on the daily here, we're essentially developing a resistance line right here at that 31,104 range. We're looking to break through that. We have, essentially got one close on top of it, held the close, and then we sold off back down to our 8-day moving average. It's not a problem. It's a relatively new resistance. Previously, we had formed sort of like an upward sloping resistance in this area here, broke through that, got continuation. There's no reason that this is going to stop price action from moving forward. But if we want to go ahead and, look at this asset as a whole, we are obviously above the 200-day moving average. We found support on the exponential, found support on the simple, and then we got those massive moves up there as well. So, overall looks bullish as long as we're on top of those. All our moving averages are in order how they should be. The 8, the 21, 55, 50, and then the 89, 200s, etc. So that looks good. We are clearly here in the bullish control zone and have been remaining in the bullish control zone. As long as that is the case, all these green areas that get lit up here should be the opportunities for buying. This is the best case scenario. We come down to the 200s, any one of these blue moving averages right here, and see green light up like that. That's our best buying opportunities historically. So, any pullback should be used for buying until the market itself starts to change in the future, or maybe it won't change in the future. But as of now, this is extremely bullish, looks bullish. If we wanted to pull up, maybe like some potential targets, we can use our fib retracement tool. There's no reason at this point in time to be fibbing as if this is the top, because we're not getting any indication that it is the top. So what we want to do is take, our previous swing high, which is going to be this point here. We're going to skip over this one here because essentially that's just a lower high, on this retracement here. So we're going to draw our tool all the way out here. So we're going to go from the top to the bottom right here, and then that's going to project out some like prices for us. And look, this looks like it could be a key area where we could potentially top out, because from here to here, that's our 100% would be right back to that level. We broke through that and immediately came up to 1.236. After that, came directly up to the 1.382. After that, came directly up to the 1.5, came back down and retested that 1.5, and here we are stuck at the 1.618. So, this is obviously operating perfectly based on Fibonacci levels, in which case if we break through this level, we would expect to come up to the 1.786. That's going to give us our next target to the upside of 31,844, which is a nice move up. That's basically like another 20% move from where we're at right now. So, I'm sorry, another 2% move from where we're at right now. That's 2.7%. With leverage, obviously, that's great gains. But essentially what we're looking at right now is this going to end up being a topping pattern, or are we going to get continuation? And like I said, there's no indication at this time that we would top out here, but there's no reason we can't just throw a fib up and just see what we're looking at. So let's throw our fib up here. We'll switch it over to blue. And then if we look at the blue Fibonacci, assuming we did top out right here, which we are showing a little bit of signs of weakness, but nothing to be alarmed about. Our next target would be down to the 21 moving average at 30,748. After that, down to the 50 or 55, which is going to put us down at this 236 range right here. It's going to be basically just under 30,000, 29,996. So 30,000, and if we do come down to 30,000, if we do break through the 8 and 21, we want to look for a potential cross like this, because as soon as we start seeing in danger when we start closing below these, it's going to look like we're going to be selling off below them, and then we're going to get that continuation down to 30,000. Likely we will find support there and continue to the upside. But if we do see a market start to shift, we could potentially look at target at the 89 at 29,375 roughly, or that 382 range, which was that previous support area that we established after this gap up here, and that's going to put us in at 29,195, and then finally for the 0.5. I wouldn't get too excited on anything more than a 0.5 retracement at this point in time. And if it does look like it's going to happen, it's not going to happen overnight. But that's going to line up. This 200 moving average is going to continue up to the upside. That's going to line up exactly with our 0.5 at that 28,575 range. That's also going to fill this gap. We left a pretty substantial gap right here, basically between the 382 and the 0.5. It's not unrealistic to think that we would come back down, fill that gap, and then get continuation to the upside. So that is the Dow Jones Industrial Average. Next, let's switch over to NASDAQ. Once again, all-time high on NASDAQ. We are up here at the $144 range. We basically came up, sold off, got a nice little strength off the 8 EMA. After we hit that 8 EMA, we came back up, put in a new high, took out any potential shorts that were put in place there, and then we did flip this parabolic SAR over red on that previous candle. This one is showing slightly more weakness than some of the other ones. We are exiting the bullish control zone. We are getting the hard sell signal. We are getting 2 histograms in a row, red. So, that is typically when I start to de-risk my position or, look at short positions as a hedge. I don't like to call tops on markets. It's the hardest thing to do, and the market can stay, irrational much longer than you can stay liquid. So, it's very dangerous to do so. But essentially, when we came up here, started to put in potential signs of topping on the daily. Last time we did that, we sold out of this zone. We didn't even get the hard sell. We came down basically last time from 133 down to 119. So that was a pretty decent little sell-off, from top to bottom here. That was like 10, 11%. So, last time we did it before that, we came down, looked like we were going to sell off, came back up, put in a new high, and then did the exact same thing, sold down again pretty violently. And when we did it the previous time, that was 15%. So is it unrealistic to think that we could get somewhere from like an 8 to 15% sell-off right now? I don't think so at all. Where would that take us from top to bottom? Right down to the 200 moving averages. 14% down would be 124.11. Again, I don't like to call tops, but I don't think it's unrealistic to think that we could get a pullback right now. So once again, let's go ahead and pull up our Fibonacci's and see what we're looking at. So on this one, we came down. This was technically the high on this position right here. And then we came down and put in a low here. And then this is going to be considered part of this rally because we never came down and put in another low after that. So we'll take the swing from there down to our swing there at the bottom. So we're going from the 137.84 area down to the 117.83 area right there. Let's switch that one over to yellow. That's going to be swing high to swing low. Our targets to the upside are going to be, the 100%, which is where we basically gapped up to, and then we got that massive sell-off from, slightly above it, took out the new high. That's very common because what happens is it gaps up, takes out the shorts that are in position, and then all of a sudden you get that continuation. So you knock out all the people that are calling it short when it bursts up like that, and then it goes in the direction. So then they have to FOMO back into their shorts as it sells off. So that gives you rocket fuel to the downside. Very similar to what Ethereum did recently. Took out the all-time high and then sold off, very powerfully. So back over here, when we came back up, we hit our first target at the 1.236. That was exactly at 142.87. That is our first fib extension. The next fib extension to the upside to pay attention to would be 145.75. But right now it looks like we're going to come back down. We closed below the 8, took out the parabolic SAR, flipped it over red. It looks like we're going to come back down to that 137.72 range, retest the all-time high that we fibbed off of. After that, that's going to line up perfectly with the 21 moving average. I would expect to find some support, potentially oscillate there, and then come down to the 886, 135.23, or potentially back down a little lower. Let's go ahead and put in our traditional fib, and we can kind of get a better idea as to what we'd be looking at. So once again, we would go from that bottom to assuming that we've already topped out the high right here. Our 236 pullback is going to be right at the 1. That's going to be the retest of the breakout, that 137.75 range. Once we confirm that, that's going to tell us we potentially put in our topping pattern. We would expect to attempt to essentially save the 821 cross. If we do get the bearish cross to the downside, we're going to come back down to the 786 next, break through the 21. 786 is going to line up perfectly with the 382. That's our next Fibonacci target, like for a bullish retracement or bearish retracement of a bullish move. That's going to be 133.35. And then again, that lines up perfectly with the 50.55 essentially. As time progresses, these will move up. And then finally, if we come down to that 0.5, that's going to line up perfectly with the 89 at 130.64. In the event that something changes in the market structure and we get a violent sell-off, we came down, basically found support before the 200, found support before the 200, never got near to the 200 and burst to the upside. If we come down here to essentially like that 618, 127.50, that's going to look like the best buying opportunity. We could potentially make it down slightly lower to like 125, depending how violently it sold off. If it sold off, and touch those 200 moving averages. But again, as long as we're above them on a daily time frame, no reason to get bearish in these markets, although it does look like they're starting to show a little bit more weakness than we'd like to see at this point in time. So let's switch over now to SPX, S&P index. Essentially, we are at that 3,841 range. Once again, all-time high. This one's showing a little bit more strength than some of the other traditional markets. We do have to pay attention here too, though, because if we look at the indicator oscillator, one thing we always pay attention to that's a bearish sign is once these histograms sell back off below our slope line, we would expect it to turn red like this. In this case, we were below it, came back up, turned it blue, came back up above it, and it remained blue, sold back below it, and it's still blue, and now we came up to it and we're finding resistance, and once again, it's still blue. That is typically a bearish rejection, and tells us we're about to get a violent move to the downside. It's a little early to call. Also, if we look at the the jewel thief, essentially same thing happening here as the other markets. We are in the bullish control zone. Last time we exited the bullish control zone, we got the blue cross below the purple, which right now we bounced the blue off of the purple, but it looks like we're potentially, if this starts to roll over, we'll get that hard sell signal, exit the bullish control zone, in which case, we could find support anywhere up here in like that higher range, or we could come down to like more of like the median range. The last time we got that sell off was very, very minuscule. It took us down basically, 2%. It was nothing. We found quite a bit of support. But if we got something more like this, more of a violent sell-off, then we could start to be alarmed. Let's look at our fib extensions. So basically, we're going to go from that previous top right here to that decent little sell-off bottom we had right there. And see what that projects out. We've already taken out the 1.786 target. If we continue to the upside, the we could get the 1.86 somewhere around here, but realistically we're looking at the 2.618 or that $4,000 range as potential targets from here. That 2.618 is all the way up at 4,126, so there's plenty of targets we can get before that, but at this point in time, fib extensions are basically irrelevant on this asset, as we've already taken out most of them. And then assuming, if we wanted to, if we wanted to assume that, these markets are potentially topping out and just kind of get an idea as to where we could come down to. There's no reason to think it at this time. We are still above the 8. We are still above the 21. Everything's postured up in a bullish manner. But if all of a sudden we started to sell off here, our first target would be that previous support, range that we established. It was resistance here at 3693, 3,693. Came above it, found support, burst to the upside. If we come back down, that's going to line up perfectly with the 50.55, and that is at 3,696, so 3,700. Again, if we come down below that to the 89, that's going to give us our 382 at 3,590, so basically like 3,600. And once again, last time we sold off We made it down just below the 89, just below the 89. Did not even come down to the 200. No reason to think we would come to the 200 this time, but if we did, the 200 is going to line up with the 618, and that's going to be at 3,445. You may be noticing a pattern with these. The moving averages I use tend to line up perfectly with Fibonacci retracements based on previous swing highs, swing lows, and fib extensions. So that is part of why I use the numbers I do, and I do technical analysis the way I do. I look for confluence between these zones. So next we have Tesla, everybody's favorite, TSLA. And, once again, same type of thing. We're at the top of a range. We're essentially in a blue sky breakout. We burst above one time, sold down below it, putting in essentially like a, resistance top potentially right here. We were able to save the 8 moving average, but we did flip over the parabolic SAR to red right here. Last time we did that was over here when we sold back down. We made it just below like the 50, 55 moving average. No substantial sell-off or anything like that. Time before that, we did get quite a bit of a sell-off. Previous time when we did it, we came down to the 50-55 moving average, got a, that was a massive sell-off, 34%. So we got to be careful for that. But, also we have to pay attention to some of the like factors that had to do with that. That was essentially like around, I believe this is when the S&P added Tesla and everything. I definitely, of all things to get bearish on, would not start getting bearish on Tesla right away, because we got plenty of histograms in a row right here, and all we did is consolidate sideways and continue to the upside. Quite a bit of, bearish histograms right here, consolidate to the upside. Got the hard sell, exited the bullish control zone, got almost no sell off. Hard sell, we're potentially getting ready to exit the bullish control zone. So, are we just going to get another sideways consolidation, or are we going to get a 35% pullback? At this point in time, you would have to assume sideways consolidation, but it's not just going to happen overnight. If we sell down below this 8 moving average and we touch this 21, that's going to be the first time. When we did that here, we got a violent sell-off. We crossed actually the 8 and 21 right here, and basically got very little continuation to the downside. So at this point in time on Tesla, I would not look for, if we did get a pullback here, I wouldn't look for anything more than $661. That's going to give us our 50-55 moving average. But before that, our target's going to be $782 basically at that 21 EMA. In the event that we sold down and we did come down and touch the 89, that's like $590. And if we got a violent sell-off, potentially like topping out, our 200 moving average is still all the way at 436. So, that's like a 50% dump, which would be a massive pullback at this point in time. But, that's going to line up perfectly with, this hard resistance level that we put in here previously on Tesla. We basically had formed a pretty strong resistance through this area, burst through it the first time, consolidated at it quite a few times. The more times we touch a resistance level, or the more times we find support on a level, the more likely it is to break, as we're eating away at these sell orders, eating away, and then we burst through it, continuation. Same way, if we come back down to it and find support, that's going to put us right at that 200 exponential moving average. We bounce it, and then it potentially break. In this case, Tesla, a lot of people are saying is overvalued. I think it's more like forward-looking type situation. Obviously, fundamentals are extremely good. Potential for growth is extremely good. But, valuation is obviously, through the roof as far as like traditional metrics. If we wanted to, man, it's not great ways to fib, some of these assets, but, if we wanted to go off of that 528 touchdown here when we got that violent sell-off back down to like $68, that was back in March, when everything dumped, and we took that to the top and we said, this is our top, we are there, and, we're done moving up, which at this point in time, tough to say. I would not want to call the top on this bad boy. People have been trying to do it the whole way up, getting absolute wrecked, turning billionaires into millionaires into, bankrupt bailout boys. Sell back off to the 236. That's going to take us exactly down to, that $480 range. Once again, confluence, that's breaking through all of our moving averages. So likelihood of that just happening at once, not very likely. We would more than likely get some kind of bounces, stair step down. If we did blow through the 200 moving averages and made it down to the 382, that is going to line up with the 377 moving average right here in gray. 382 target would be 335.74, and then once again, if we got a violent move like we did back in March, a full-on market crash, that would take us down to the 0.5, which is also where the 528 lines up, and that is $250. I wouldn't hold my breath on that one. That would be a basically like game-changing sell-off, 70% sell-off in Tesla. I wouldn't bet on it, but if it does happen, probably a lot of people are going to be sleeping on the streets as they did not realize their gains along the way. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Hey, that's a big one. Freight train. Don't get caught in front of that one when it decides to pull back. Don't get caught in front of it when it's going up. Here we got the DXY US dollar currency index. This is the US dollar in relation to a basket of other currencies. I'm not going to go through them all right now, but it's basically like, Japanese yen, Japanese currency, the franc, the euro, the British pound, and Canadian dollar. Man, I'm missing one every time. But regardless, this thing has been in a basically downward consolidation pattern since March. So when March sell-off happened, everybody rushed to cash. Since then, everybody's been leaving cash, going into all these other assets, assuming that the dollar is going to die. Let's go back a little further and just remind everybody, though, everybody is extremely, extremely bearish on the dollar. Let's switch to the weekly chart. So we are in, basically since March, we're coming up on a year downtrend. But prior to that 1 year downtrend, we were in a micro from January 2018 till March of 2020. So we had like 2 years of a clear uptrend followed by a 1 year retracement. And then, before that, people always talk about how the dollar's been in a downtrend for, decades. But, we've technically been in a micro uptrend since March of 2008. So from 2008 till, 2000 and technically, if you want to call this the high and say that we're already entering into a downtrend, we were in an uptrend from 2008 to 2016. So that's somewhere between an 8 and 12 year uptrend inside of a massive downtrend. So, last time we did this, we got the exact same move down here. Nice retracement, and then kept going back up and put in a lower high. So it's not unrealistic to think we could come all the way back up to like that 98 range, put in a lower high and continue to the downside. Or, we could continue this 12-year trend back to the upside. So got to pay attention here. And, you're not trading this thing on a 50-year time frame. You're trading it on weeks or months or, potentially even like a yearly trend. People always saying dollars in a downtrend for 50 years. Well, that's fine, but you're not trading 50-year time horizons. So let's be realistic here. And, what are we trading? We're trading like 6 month, 1 year, 2 years, something like that time horizon, whatever, maybe less than that. So let's remember that we've been in a downtrend inside of a micro uptrend inside of a macro downtrend. So is it realistic to think that after all this selling coming into place, after all this weakness, the dollar has shown basically, we are down 13%, 14%. That's massive in currency markets. It's not unrealistic to think that if we break through this channel, we have a top right here, we have a bottom right here, we have a top right here. The heart line is getting very, very well respected. We essentially have a touch point at the bottom right here, a couple touch points at the bottom right here, 1 at the top, 2 at the top, 3 at the top, potentially 4 at the top if we break through this 8 EMA on the weekly, at 91. If we break through that, we're potentially going to get a measure move of the channel back up to like this 94, 95 range. I'm not 100% sure it's happening, but we are showing quite a bit of strength right here. We, basically looked like we were going to come up. Bears were in control. Looked like we were going to break out and get some strength. Couldn't get above the 21. Here we broke down from it again. We put in quite a bit of bullish divergence. So we have a low right here. We have a low right here. We have a low right here. A series of higher lows, 3 in a row. Okay, and then here, we look at this, we have a low right here, we have a lower low right here, we have a lower low right here. That is a series of lower lows. So that is bullish divergence, 3 drives of bullish divergence, followed by an uptrend, like a burst to the upside. We could easily get across like this, and then it fails. But last time we got the cross, we came up to the top of the channel, and we came all the way up to the 89 EMA. We could come up here and get rejected at the 50-55. I think it's more likely that, we potentially find support here, burst up to at least that 91, chase out a lot of the, a lot of people are short on the dollar and long on assets right now. So a lot of times what happens is, once there's too many people in one direction on trade, you push the trade in the other direction because that's where the money's made. Because if everybody's in the same direction, it costs a lot more money to borrow money. Leverage gets more expensive as everyone is taking leverage in that direction. There's interest rates or funding rates that you have to pay to borrow that money. Therefore, what happens is a lot of times everybody gets on one side of the trade, funding rate goes through the roof, so you squeeze the funding rate, sell off those assets or burst up this asset, and then boom, reposition yourself back again for continuation to the downside, or in the case of the stock market, continuation to the upside, crypto, whatever it is. So, but we do have our histograms above the slope line. Flip the slope line over blue. We do have exit of the buy zone. We do have triple bullish divergence on all the indicator oscillators down here. We are at the top of the range. We didn't make it quite into the bullish control zone, so the bulls couldn't quite take control. They got rejected right at that 80 area, but it's not unrealistic to think we could sell back down, find support on the parabolic SAR, and get a burst back to the upside. Everybody's getting extremely bullish on precious metals and everything like that. People have been bullish on, stock market and everything like that. Fundamentally, dollar looks weak. They're going to print all this money or whatever, but, it's already kind of priced in, and now it's looking more realistic that this doesn't happen until like March, maybe April, whatever. So it's not unrealistic to think that we could get like a 2 or 3 month potential uptrend, breakout, measure move, something like that happen in the meantime. At which point in time we would expect to get rejected at the 89 at the top of the channel. But if we did break out of that, the measure move is going to take us back up here pretty violently, and it's going to change the scope of things, and it's going to start looking like a market top is in for traditional assets. So, take that one with a grain of salt though. Gold is next. This is the CFDs on gold, dollars to ounces. This is exactly what we're talking about happening. We came down here, found support on the 200 EMA, SMA, moved back to the upside, but we put in a third lower high. We had a high back here when gold topped out at like 2100. We had a lower high right here when gold topped out at 1965, and then now here we put in a third lower high at 1958. This is on the daily here. We have a series of lower lows. People are saying, well, this is a higher low. Well, is it a higher low, or is it just going to sell back down here, and then we're going to come lower than 1763, and then all you have is a high, a low, a high, a low, a high, a low, so I don't think it's unrealistic to think we're going to sell back down here. I'm not super bearish on gold or anything. Fundamentally, long term, I'm bullish on gold for sure. But, are we going to come back down to $1,723? Sure starting to look like it to me. Everybody got extremely bullish right here, But, what we need to pay attention to is when we come down to a moving average, we get a push away from it, come back down to it again. We get a weaker push away from it, come down to it again, start to just consolidate on top of it. It's going to break. Typically, it's going to break. We want to see a powerful rejection away from it, and we do not want to revisit it. Here, we got that powerful sell-off right here back in March, came down through it, got rejected, didn't even come back close to it again, put in an all-time high. Here, the opposite happened. We came down to it, got that strong rejection back up, and then we came right back down to it again. That looks bearish to me. We are clearly in a downward consolidation pattern or, channel. We basically got that push up out of it. Looked like we're potentially going to get the measure move back to the all-time high. Got very strong rejection back to the 200. We're back at the top of the channel, and we're getting rejected again. If we consolidate here long enough, maybe we get that measure move, and we do get that burst to the upside. There's definitely potential for that. Come back in, put in another higher low, or break out all the way to the upside, put in a higher high. But until then, gold miners and precious metals are just going to continue to, sell back off inside this channel. If it does sell back down here, the bottom of the channel lines up perfectly with the 528 moving average. I'm sorry, that's the 377 moving average. So it's not unrealistic to think that we're coming back down to $1,723 on gold, or at least a retest of that $1,769. Flipping over to silver, CFDs on silver, dollars to ounces once again. Silver is looking, it's weird because on the macro, silver is weaker than gold. It has not retested its all-time high of $50, but it is, however, looking stronger in relation to gold on the micro. When it came in and put in its high at like $30 right here, it came down, retested that 200 area, and then now it's not even close to the 200, as where gold sold back off and was like basically sitting on the 200 there. So silver technically looks stronger, but overall, silver's going to do whatever gold does. But this is just looking like a descending triangle to me. We're basically, same thing happened, came back, saved the moving averages, but all we did was a high, a low. We came in, put this high right here, and then a lower low. Everybody got extremely bullish when we took out that high and said, this is it. But really, what do we have? We have a high, we have a low, we have a high, a lower high, and then potentially a lower low. So, if we take out essentially this area of 2250, which would just be a retest of the moving averages right here, then all we have is a high, a low, a lower high, and then a lower low. This is starting to look really clearly like a descending triangle to me. I think our next target is the 200 moving averages. So everybody's saying they bought the bottom right here. They're repositioned in silver. They're loading up their bags. I think you're buying someone's bags. More likely to see a $22.50 target in the near future in line with these moving averages, or potentially 377, $20, $21, or the 528 all the way down here, $19.90, $20. I know people don't want to hear it, but lines up with a lot of our horizontals. We basically broke out of this descending triangle that we're putting in, got the measure move to the top. But are we just inside of another larger descending triangle? Like I said, everybody got extremely bullish on this move up right here. Didn't want to take profits because they thought we're going to the moon. But in all reality, is that just a high and then a lower high? And then this green line right here is essentially, let me make this a little darker so it shows up better. That's just our top line, and this is our bottom line, and we're still in a descending triangle. That's what it looks like to me. It looks like that's a high. That's a high. It looks like low, low. Come down here for the same low. Find support on the breakout point and the 200 moving averages. Come back down here. That's going to put us at that 22.63 range, and then we get a burst back up to another lower high at $26. Oscillate inside this range, potentially break. If we get that measure move break, that's $16.60. That's also from the bottom here in March. Now, granted, this is paper trading. You weren't going to buy silver real life for $12 an ounce. But there's been extremely high premiums on silver, but that lines up with our previous breakout point and 618 at $16.83. Do I think silver is going to $16.83? Not in real life, but paper trading, definitely a possibility. Definitely a possibility. There's a ton of shorts on silver right now, so it would make sense to push this to the downside, cover your shorts, and then get a breakout back to the upside. And then we essentially put in a wave 1, a wave 2 retracement back down to 1663, and then we can get that wave 3 breakout, and potentially come up and test our all-time highs. If you watch some of my previous videos, you know that silver is putting in like a 30-year cup and handle pattern. We have a retest of the all-time high at $50 basically. Came back up and fell short this time, and then essentially if we break up from this point, we could potentially come back up to that $50, and it's going to sure look like a cup and handle on a long-term time frame. And the measure move from that is like $90. Gold silver ratio is takes I think about 70 ounces of silver right now to buy an ounce of gold. That is historically pretty high. So is it possible that gold breaks out to $3,000, $4,000 in the next year or two, and silver breaks out to $50, $75, $100, maybe $200? Yeah, I think it's very likely in the future, especially if we take this green initiative worldwide, but in the meantime, could we see $16 and then see $100? Yep. And it looks more likely we're headed to 16 or 18 or 20 or at least 22.50 way before we're headed back to the upside. This could change, and if it does, it's not going to happen overnight, but we are paying attention to that. In the meantime, I would expect silver miners, gold miners, etc. to get absolutely crushed if we sell off. So here we have our Bitcoin chart, Bitcoin daily, going to the cryptos. On this daily, exactly what we said happened. We came down exactly to the 50, 55 down here, found support, came all the way back up to retest the breakdown. Exactly what I said happened. Try to prevent the 821 cross, and so far it looks good. We did get rejected exactly at that point, 34,000. Once again, exactly what I said. CME is going to close, so it's not going to cross the downside. We saved the cross to the downside on traditional markets. Anything could happen over the weekend, so there's probably going to be quite a bit of volatility. Could burst us back to an upside. I don't think it's going to come up any higher than 38 or 39,000 right now. I don't think it's going to go any lower than 29,000. So, we have a $10,000 range right now as far as I'm concerned. We could potentially burst us back to the upside, sell back off and get the rejection, or we could just consolidate inside of, basically like 34,000 to 29,000. But you got to be taking advantage of this volatility. At least that's what I'm doing. This is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. On the daily, we have lost the uptrend. We have flipped the TJD, TDMACD back over red, lost the slope line. Histograms headed to the downside. We got the hard sell. We exited the bullish control zone. We're coming down here. We're at the 50 point. We found support at the 50 point, found support at the 50 moving averages, came back up, is this going to be a rejection like it's already showing right now? Are we going to close this daily tonight and then just sell back off and put in a, potentially higher low, lower low, something like that? I would play this range right now. Sell resistance, buy support. Sell resistance, buy support. That's what I'm going to be doing, making profits along the way, accumulating into spot, and then covering my spot with short positions so that I can lock in those profits. Again, not financial advice. Knife came down here very powerfully on the Jewel Thief, sticking out the bottom. If you do not have this indicator, I highly recommend you get it. It is absolutely amazing. Look at our top. Look at our bottom. Let's look at our chart. This was our top right here. Consolidated up, floated up on nothing basically, and then boom, that was our bottom right here. So, could we easily just float back down here and get more action in? Yep, but what is it telling us? It's telling us that we are likely at the top of the move, and then when we put it into line with the stochastics, with the, histogram right here, we got the absolute top end. So, and then again, when this rolls back over here and flips from red to green, that's our absolute bottom end right there. Same thing here. Rolls back over, find support, that's our absolute bottom. So we're paying attention to that, paying attention to these crosses, paying attention to who is in charge, the bears or the bulls. Next is Ethereum. Okay, so Ethereum could go either way right now. Not calling this out as the actual top necessarily, but if we go from the previous swing low of this move up here, which was $395, and we go all the way up to our top right here at $1,447, new all-time high on I think just about every exchange. From then, we came down almost to the 236. Didn't quite get there. Trying to save this 821 cross on the daily. Bounced the 21. We sold back off below it, but did not close below it. We closed right at it here. And then we opened back up, pushed back to the top, getting rejected by the 8. We have a parabolic trend line in place right here. We went full on parabolic right here. Broke that parabolic trend line. Got that massive sell off. Came back up. Retest it. If we cannot get back on top of this parabolic trend line, if we cannot get a new all-time high, consolidate here on the daily time frame, start closing back above it again, we would expect this is a break, a retest of the break, and then we would expect continuation to the downside. The previous parabolic trend line, I'm going to turn off the moving averages. Previous parabolic trend line was this green one, from the bottom over here at 306. We were finding support on top of it, broke down from it, support, 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 and then we started going full on parabolic in blue right here. So if we break down from it, the likelihood is that we will come down to the 236, bounce, put in a lower high, come down to the 382, find support on that parabolic trend line at $800. From our basically from our top right here at 1400 down to 800. That's enough to pretty much shake anybody out of a position that's recent. 45% position. Not unrealistic to think we find support there and get continuation to the upside. In a bullish market, crypto likes to find that 382 support and continuation. You could potentially say that we were going to, basically retrace this entire move from 80. It was about $90, let's say. So if you were going to retrace from $90 down, that would be slightly below the 382. It would line up perfectly with our green parabolic trend line right here, and that would give us a retracement of $750. Again, could we come down to 750, put in a lower high, sell back off again, come down to our 382, retest this high right here, this breakout point at $500, and then that's probably like one of the best, if not the best, buying opportunity for continuation to the upside. Also going to line up with the 377.528 on the daily, depending how long it takes us to get down to the 236 here. If we continue to the downside, it's not unrealistic to think that that is going to line up perfectly with our 200 moving averages. So if this 200 exponential keeps floating up right here, and we got our parabolic trend line right here, all of a sudden that $737 range looks pretty good. If we sold down here violently now, got the 382 of the micro move, that's going to line up to 89. But as far as I'm concerned right now, 236 is our next target to the downside, $989. We could easily see some continuation to the upside over the weekend. I do not think we're going to take out this all-time high anytime soon. If we do, that's a blue sky breakout and potentially looks good. But let's remember, we just got a blue sky breakout. Everyone got extremely bullish, and your boy was over here screaming, throw over. Throw over. It's when the main asset Bitcoin consolidates and is not showing strength, and then all of a sudden, what do? You want to move this price to the downside instead of just selling into it because you're finding support because this looked more bullish than Bitcoin. What do? You walk up to the edge of the cliff, you take the baseball, you throw it up as high as you can, and then on the way down, it reaches terminal velocity. All those people who took longs on the breakout now have to cover their longs by selling. They have to sell out of their long position or get stopped out of their long position when they start selling off. So it creates momentum to the downside. Same way when you shoot an arrow out of a bow. If you want to shoot the arrow up into the air, you have to pull the bow down first. You pull the bow down, you shoot the arrow up in the air, the arrow eventually runs out of steam, and then when it comes back down, it comes down more violently. So that's what we're paying attention to. Again, pay attention to the indicator oscillators. Stoch slope flipped over back red. We're trying to save these moving averages. We are currently, but in all reality, once again, that range looks pretty good from 1125 till 1248. That's not bad. It's basically like a little 15-20% range roughly. We got a bunch of histograms in a row. We basically topped out. We're coming back down. Expect to find support on the slope line in blue right here. But if we break down below, it's going to flip over red. It's going to look like an elongated, consolidation or potentially, legitimate fib retracement. So last one for today, Polkadot, DOT. It's a weird situation because I've got it on Kraken Exchange right now. Technically, when it came on to Kraken, it was at like some ridiculous valuation, sold back off. That's hard to do technical analysis on. I basically ignore that. You could probably find a better exchange to look at, but I was just looking at this one. So essentially, once we broke out from this downtrend, broke out from this resistance point right here, we would expect to get like the measure move of the situation. So we're not going to pay attention to that. What we're paying attention to is overall, this thing is one of the most bullish looking cryptos right now. We're on top of the 8 on the daily. When we sold off right here, didn't even come back down to the 21, which the parabolic SAR is below the 21. So we found support. This thing did not sell off nearly as much as Bitcoin or Ethereum during that past dump. We basically got one red histogram and we got green. Fundamentally, this thing's strong. Technically, this thing's strong. It's one of the strongest cryptos in the space right now, like chart-wise. So, and we basically saved the bullish control zone right here. Bullish control zone below it. Bullish control zone saved it. But this is looking more and more like it's going to break to the downside in the near future. When it does, we're potentially going to get a powerful sell-off. I would expect something down to like that $13 range, basically. If it does sell off. As far as targets to the upside, it's a tough one. Let's say we went from this top right here to the bottom right there. We're basically looking at the 236. I mean, you could add in some other targets if you wanted to, but my next target to the upside is like $22, which is a nice move from where we're at right now. But we basically came back down, found support on the 1.786, found support on the 8 EMA. If this breaks out over the weekend, I don't think it's unrealistic to think it hits $22. If it breaks down to the downside, I think the 21 moving average and the parabolic SAR is going to act as support at least initially. 1370 on Kraken. It got a violent sell-off here initially before any of the dump down happened. Got bought straight back up. This was like a 1-minute candle. No way you could have capitalized on that unless you had resting orders in the books. And if you did have resting orders in the books, chances are you probably got liquidated, on this massive wick. But again, it came back up immediately. So it's not unrealistic to think that the books are thin down to that point. So 1250 looks likely. Make sure you got those stops in place on this bad boy, because it will wreck your face if it decides to sell off. If we do sell back off to the breakout point right here, the previous high, not unrealistic to think we would come back down to $10.35. I was saying back here when we broke out of this pattern, basically took out the parabolic SAR and everything at like 670, 660. I was like, that's a buy all day. Came back up, came back down, retested it, didn't even come back down to it. And, since that breakout point, in the last, it's not even that long, couple weeks, 200%. So, it's a strong chart overall, at least for the meantime. Chainlink, BNB, some of these ones that have good fundamentals or good technicals, strong charts, been first movers through this bull market, Bitcoin itself. These are the ones I'm focusing on. I'm not looking for the weak one that hasn't broken out yet. It doesn't make sense to me because typically people are not going to pay attention to it until it starts doing something. It's nice to catch those moves ahead of time, but I would rather have a confirmed breakout and get continuation, than just like get stuck in like XRB or Cardano or Monero or something like that. So Well, there you have it, guys. Hit quite a few assets. Once again, the video is not short. I do try to make these things short, but I try to cover as much as I can and go into in-depth analysis. If you don't like the whole video, if you don't like all these assets, skip around, find the ones that you do. I do appreciate the love in the comments. Do appreciate all the new subscribers lately. Make sure you share. Make sure you like. Make sure you subscribe. Get on the notifications. You never know when I'm putting a video out here. I try to do it at different times than everybody else so you can get usefulness out of these videos. If you don't have time to watch them all, watch it the next day. The price action might not be relevant, but a lot of times you can watch a whole video and be like, damn, he was right about that. How do you know? Well, I explain it right in the video. So real technical analysis from a real motherfucker. Crypto trend trader, and I'm out of here.